live from Manila at the Philippine Stock Exchange Invest PH conference. This is Insight with me, Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. Asian stocks trading higher, defying losses on Wall Street, where traders trimmed exposure to U.S. risk assets ahead of the Fed decision. The yen paring losses as the Bank of Japan keeps policy on hold. India's Bajaj Finserv is set to buy out German giant Allianze and take full control of its local insurance businesses. We'll get the outlook from the group chairman and MD, Sanjiv Bajaj. Also ahead, Philippine Stock Exchange CEO Ramon Monzon joins us live and exclusively here at the first investor conference in Manila. Plus, another big exclusive. Xiaomi's CFO gives us insight on the company's EV ambitions after bumper quarterly earnings. Well, it's day 4 of gains for Asian stocks, even after a sell-off on Wall Street. Gold climbing to fresh records as the uncertainty over President Trump's policies sparks concerns of a recession. Traders will be seeking clarity from the Fed when it announces its policy decision later. Meanwhile, the Bank of Japan has left rates unchanged, with attention now shifting to Governor Ueda's news conference and any hints on when the next rate hike may come. The market consensus seems to be around mid-year. And over in China, we continue to watch tech stocks, including Xiaomi, whose earnings beat expectation on the back of its EV plans. Tencent set to release earnings later that will give investors more direction on the sector, especially when it comes to AI. Lots to digest. Let's get insights with Terri Spath, founder and CIO of Zuma Wealth, who has some 25 years of expertise in financial markets. Terri, good to have you with us. Of course, front and center, central banks, and it is a complex situation for them. We saw that in how the BOJ responded. It did what the markets expected. Now we await to see whether or not Governor Ueda tilts, makes any changes to trajectory. What are you anticipating?
Well, nice to see you, Haslinda. Thanks for having me on again. You're asking about the Bank of Japan in particular, it sounds like. And, you know, we've been, in general, very constructive on Japan. We've loved what's going on there, the green shoots of jobs, of incomes and consumption. That's all been improving. And that's coming through in nominal economic growth. Inflation and wages are benefiting from the government reforms. That's all translating into improving earnings. And, you know, we think Americans in particular and the U.S. investors are underweight Japan. We like it. We think that the BOJ will continue to support the efforts of the government there. And so we can't say enough good things about Japan right now. We really that's one of our top ideas.
It is stuck between a rock and a hard place, isn't it, for the BOJ, Terri? I mean, as much as it wants to raise rates, it has to beware of the spike in the yen.
Yeah, the spike in the yen, I think, it's being driven by the sort of flight to quality, weakness in the dollar. And, you know, obviously that's been pushing up the yen, and that kind of creates some challenges for the Bank of Japan. But I do think that they can continue to raise rates. They've been very clear about their policy, and we think that they'll stay on track despite what, you know, some strength that we're seeing in the yen that is maybe a little bit more sloshy, a little bit of noise right now because of the risk off that's been characterizing a lot of the U.S. in particular.
Since you love Japan so much, Terri, how would you play this market against a backdrop of perhaps, you know, U.S. exceptionalism losing momentum?
Yeah, the U.S. Yeah, there's been a pivot in that U.S. exceptionalism theme, which it was really interesting because I feel like every strategist at the end of 2024 was saying, you know, it's U.S. and U.S. only. But the uncertainty that's been injected in the markets here in the U.S. is really annoying investors. Maybe the administration will impose tariffs, maybe not. Investors really want to see them choose one direction or another, and that increasing concern of the direction of travel in terms of policy mix in the U.S. has really been contra to growth. It's been contra to earnings. It's really confused a lot of market participants, and it's forced a sort of wake-up call to what else is going on in the world. Not just in Japan, where we've been seeing some excellent reforms that are working, but as well as in Europe and in Germany in particular. So there's a rotation that we fully expect to continue out of the U.S., not exiting the U.S., we're still constructive on that, but making sure that there's diversification in terms of international diversification, having some exposure internationally, particularly in the form of Japan, as well as in the form of Germany and Europe in general. That's where we're seeing the flows, and we think that those trends are going to continue.
But in terms of how you deploy your capital in Japan, what would you be buying there?
Well, I mean, I think if sitting in a seat here in the U.S., the way that we would play that is just to have broad diversification through a simple ETF that holds, you know, the 40 largest stocks in Japan. We like the ticker EWJ. That gives you that large cap and mid cap exposure. It's trading at a lower PE by a lot. I think it's at 17 times earnings relative to the U.S. at 22 times. It's a safe, solid way to participate in the gains that we continue to see in Japan, and we really like that. It's just a broad play. In terms of the broad market cap, Japan represents like 5, 6, 7% of market cap, and so to have at least that weighting in your portfolio is what we're suggesting to clients and what we're deploying as well, even higher than that, up to 10%.
Terri, given the sell-off which we saw in the U.S., some are now betting on the Fed to put a lid on the losses. What are you anticipating? Is it too soon to be talking about a Fed put?
That's a really interesting question, Haslinda. I mean, that used to be the only thing it seemed that we got questions about from our clients is like, what is the Fed going to do, and aren't they going to kind of save the day? And it's certainly cutting interest rates provided that floor and that Fed put. We do have a Fed meeting tomorrow. Jay Powell will be addressing the markets, and we expect that, as always, the Fed is going to be patient. They're going to be data dependent. If anything, we would critique the Fed for being slow to react and late to the game. So we don't expect any changes. Nobody really expects any changes tomorrow. But we will be listening for that, you know, how the Fed will be maintaining its hand on interest rates going forward, what their policy path might be going forward. And I think they're, you know, in a challenging place in that inflation is still a little bit sticky. It's higher than they want it to be in the U.S. And yet there's a lot of policy coming out that could stunt growth. And so they're going to be, I think, navigating those two competing forces. We think that there's room for the Fed to cut in the middle of the, you know, in a few months. But I'm not feeling very confident that they're actually going to do that. And so we're not relying on a Fed put at all. We don't think that that's part of the conversation in the way that it used to be, and we used to be able to rely on in years past.
You talked about how you're still constructive, U.S. markets, U.S. stocks. How do you play that best on the back of the sell-off in the mega caps?
Oh my gosh, yeah, what a huge sell-off in mega. So there's really been a couple of key cross currents that going on domestically in the U.S. One is the slowdown of growth, and we've been seeing, you know, data that's supporting that. Not like, you know, alarming levels of slowdown, but slowdown in growth. And, you know, and that's as a result of spending cuts and effectively trade barriers reverberating in the form of weaker confidence. The second, I think, cross current that we're seeing is that sort of loss of the love affair with Mag 7 stocks, which were totally priced for perfection, and they just aren't perfect anymore. So it's a very tricky backdrop from that top down, where you've got a policy mix that just induces a lot of uncertainty and volatility, and then from the bottom up, where you've really got big questions on what have been pretty much the biggest stocks in the world. But when we look at the U.S., 5-10% drawdowns happen a few times every single year. That is not unusual. We're not expecting a pronounced U.S. economic downturn. So we're looking at, okay, what do the technicals tell us in terms of if we don't expect a total downturn, but we don't want to catch a falling knife, what we're looking to from a technical point of view is if the S&P 500 can cross back over that 200-day moving average, which it breached recently, that for us is going to make us feel comfortable stepping into what is really a fearful market right now, because we think that would be an opportunity for our investors. At least it has been historically. So that's what we're waiting for at this point. We think we're pretty close.
It is a fearful market and there's so much uncertainty. It's quite confusing as well, Terri. Is it risk on? Is it risk off? I mean, what are you seeing from the flows? What are they telling us?
Oh, I think at least in terms of if we're looking at certainly a technology, if we were to look at technology in the U.S. and in Mag 7, which you brought up, it's risk off. Even if you look at the S&P 500, that broad market metric for the U.S., it's risk off. We breached the 50-day moving average. We breached the 200-day moving average. Those are technically important levels for the S&P 500. So people are certainly feeling, I hate to use the word uncertainty because I hear it all day long, but there's so much uncertainty, it's creating this fear in the U.S. the markets. But we do think that there's ways to fill out your portfolio. Cut your broad market exposure to the U.S., say, in half. Populate that with international stocks, especially Germany and Japan. Two other places where we've been adding to are long duration U.S. government bonds. We're seeing interest rates actually fall at the long end, which is pushing up prices. That couldn't mean a sign of slower. It does mean a sign probably of slower growth, but it's not. It's not dropping like a rock. So we like TLT for long duration fixed income. And we also think it can make sense as an alternative for a really low correlation, because international correlates with the S&P. Really low correlation is actually in gold. And I don't mean going out and buying gold bricks, although that sounds kind of fun. But I think you can buy, the GLD ETF, and that gives you a position that is absolutely in an uptrend and has very low correlation. So we like that as well.
Terri, we have to bring China into the equation. How are you looking at the rally we're seeing in China, in Hong Kong? Are you convinced? I mean, sitting in the U.S., are you buying into the China story? Are you more confident looking at it right now?
We're always looking closely at China. It was such a great story for so long. We've been very negative on China for a while now. We haven't had any exposure, and we've just easily dismissed it as saying like it's a hard no, just stay away. There's so many problems. There's some risk to that right now, although I want to be clear, we're not buying anything in China right now. But this emergence of AI that is faster and cheaper than tech companies here in the U.S. are able to do, that is changing the theme a little bit. This 30-point plan that came out to boost consumer spending that came out of China, it's an effort to inject momentum into the economy. It's a step, obviously, in a good direction, but that doesn't mean it can fix China's bigger problems of deflation, of unemployment, of low household income. Those are not easily solved issues. So while the direction is positive on the margins, implementation will be everything. So we're watching that closely. But again, very negative on China. Don't have exposure to that at all right now for any clients.
So the re-rating that we're seeing for China from the likes of Goldman is not quite justified at this point in time.
Well, I mean, I don't want to completely dismiss China. And obviously there's a lot of smart people at Goldman, and they have their points of view. It's cheap, it's unloved, but there's some major problems that, again, we don't think, and the Chinese government is looking to address these problems. I mean, this 30-point plan, again, it's a step in the right direction. But again, we think that confidence has been dented so heavily by the property market slump that really evaporated wealth, the layoffs, the salary cuts. So while there might be glimmers of hope here and there, and the market's cheap relative to some of the other ideas we have, again, We think it could be a trade. Obviously, there's been a good trade in there right now, but in terms of a longer term investment, we're not willing to make an allocation for that, at least not at this stage. Maybe at Goldman they want to, but we're not doing that.
Not yet. Terri, thank you so much for your time today. Terri Spath, founder and CIO of Zuma Wealth. And as Donald Trump continues to stoke volatility on the markets, here are some of the stories we're watching. Russian President Vladimir Putin has refused to give Donald Trump the 30-day ceasefire in Ukraine he and his team had demanded as a path toward ending the conflict. During his call with Trump, Putin agreed to limit attacks on Ukraine's energy infrastructure while demanding that the U.S. and others stop the flow of weapons and intelligence to Ukraine. Still, Trump is hailing the outcome as a victory and says his focus is on making sure Russia and China don't get too close.
The first thing you learn is you don't want Russia and China to get together. It was always a natural enemy situation. They're probably friendly now, but we're going to be friendly with both. I think we're going to be friendly with both. China needs us in terms of trade very badly.
And U.S. Chief Justice John Roberts says the impeachment of federal judges is not an appropriate response to a disagreement with their rulings. He made the statement in response to President Trump's calls for the removal of a judge who tried to pause the deportation of hundreds of alleged Venezuelan gang members. The U.S. Constitution says federal judges can only be removed for treason, bribery, and other crimes. Still ahead this hour on Insight, Indian billionaire Sanjiv Bajaj will joining us for insights on his firm's decision to buy out Allianze from their insurance joint venture for close to $3 billion. We get his outlook for the business next as it flies solo after 24 years. Keep it here with us. This is Bloomberg. Welcome back. German insurance giant Allianz has agreed to sell its 26% India joint venture stake to Bajaj Group for about $2.8 billion. If given regulatory approval, the transaction will grant the Indian conglomerate full ownership of both the general and life insurance businesses. Let's get more on the outlook straight from the top. Sanjiv Bajaj is chairman and MD of Bajaj Finserv, and he joins us exclusively now from Mumbai. Sanjiv, good to have you with us. What do you make of the narrative that this buyout is not like any other buyout? Instead of Allianz buying your stake, you're buying theirs.
Good morning, Haslinda. It's firstly a very clear win-win deal for both partners, and it's been a very amicable parting of ways, of course, subject to all the regulatory clearances. We've had a 24-year-old partnership, and both partners have been very committed to India for insurance. But our strategies now for India have differed, and that's the reason that we found it best to separate and go our own way. We are very confident on the India story. And this investment from the Bajaj Group of nearly $3 billion is testament both to our commitment as well as to the opportunity that India provides. And we do believe in our Prime Minister's mission of make in India, but also make by India.
Well, it is a hefty price tag, $2.8 billion. How will you fund it?
We are planning to fund it internally through the main promoter, Bajaj Finserv, and other companies in the Bajaj Group. And that's why we don't need to raise any outside capital at this point.
Sanjiv, we know there are plans to IPO both units. Can you shed some light on when that might be? What conditions need to happen first before you do that?
Well, the insurance regulator last year engaged with the larger, older insurance companies that are still unlisted and asked them to put together a glide path towards possible listing in the coming years. There is no fixed timeline for this. In our situation, given this significant change that will happen in branding, not in running the business, because we've been running that through a very effective board. But branding will change, and I mean, the regulatory approvals still have to come, then the shareholding change that will take place. So at a suitable time, the board of both the insurance companies will decide on what's a possible listing timeline, what's the process of doing it. So we don't have anything definite at this point of time, but our intent is that in the coming years, the board would very seriously evaluate it.
Sanjiv, might you look at some local partners, or are you definitely going to do it alone?
We're clearly doing this alone. And when I say alone, it's alone with 40,000 people in the team, led by two very solid CEOs, one of whom has been with us from the start of the company, the other nearly 10 years. And a very solid team, and as I said, a very solid, experienced board has already been running this company. Allianze owned 26%, so provided us with needed support where required. But this is a business that has been run in India, and we have the team on the ground to doing it.
I asked the question because there are murmurings that perhaps Allianz is looking for a partner in Ambani, and essentially Allianz could end up being your competitor.
You know, in the Indian insurance market now, there are nearly 50 different players. We have enough competitors there already. Our experience with Allianz tells us that they're a mature, long-term, focused company. And as a competitor, it's always good to have somebody that is fair and reasonable than otherwise. As per who they're going to partner with, or whether they're going to come alone, this is naturally something for them to decide.
Do you see further consolidation within the sector now that the government has allowed 100% FDI?
There could be. The government has not yet allowed it. The regulation needs to change, but the intent is very clearly towards that. So you could have a few foreign majors that have not yet entered the Indian market. But given the fact that large companies in the insurance space, whether it's led by SBI, HDFC, ICICI, ourselves, are dominant, are spread across India, it's not going to be easy for the next set of companies to come in, especially if they try to do the same thing. I do believe that the India opportunity has just started across multiple sectors, including financial services and insurance. And what you need is smart new strategies to build out new businesses as India continues to grow. So companies that will do that, you know, any business takes a while to grow, and to grow profitably and sensibly. I think it takes 10, 15 years. Companies that do that will find an opportunity in India. But if you try to do the same thing in the top 100 markets, the same kind of products where the rest of us are established, it's not as easy.
Sanjiv, always great to have you on the show. Join us again soon. Sanjiv Bajaj, Chairman and MD of Bajaj Finserv. Well, still to come on the show, I speak exclusively with Philippine Stock Exchange CEO Ramon Monzon as the first ever investor conference begins in Manila. Keep it here with us. This is Bloomberg. Welcome back. You're watching Inside, and here's a quick look at where markets stand. Japan, of course, will be coming back from that lunch break. It is in focus because it is BOJ Day, and as expected, the BOJ stood pat, keeping rates unchanged. The question is, what murmurings, comments will we hear from Ueda at 3:30 p.m. Presser? Will he perhaps modify his guidance to indicate the BOJ is getting ready for its next move? Some expectations it may move in May. He may also try to manage expectations on how high rates will go to avoid a spike in the yen, possibly hinting at 1%. That would be the BOJ's near-term goal. Now, Chinese consumer tech giant Xiaomi saw its sales during the last quarter grow at the fastest pace since 2021. It also raised its EV sales targets for this year to 350,000 vehicles. That's helping extend what has already been a stellar stock surge over the past year. Vice President and CFO Alain told us exclusively they're now focusing on improving gross margins.
I think that if you look at our results last year, I think that the one interesting thing is all the areas, major areas of our business continue to grow. Obviously, we have the EV business, which is a new business that we started delivering in April of last year. And in 9 months, we delivered over 136,000 cars. But more than that is, if you look at the smartphone side, we grew our revenue by over 20% last year. Right? We gained market share. Our global market share last year was 13.8%, which is 1% higher than last year. In China especially, we grew our market share by 1.7%. And obviously, the premiumization strategy has started to work. Right? If you look at our IoT business, last year was the first year that we exceeded 100 billion RMB in terms of revenue. Right? So, all in all, we put it together, you can see that. And the IoT business grew 30% as well year over year. So all in all, we've achieved very good results. As you mentioned, 35% year-over-year growth. And in fourth quarter of last year was the first quarter ever that we achieved over 100 billion RMB in terms of quarterly revenue. In terms of profit, obviously, we are focused on improving our gross margin. Our gross margin hit 21.2% in our core business in 2024, which is similar level to 2023. And our EV gross margin was 18.5% for the entire 2024, which for a startup company in the EV business like us, I think is a remarkable achievement.
The numbers for the EV in particular, you only launched in April of 2024, and as you said, around 140,000 deliveries. This year, though, the target has been raised to 350,000 deliveries. So what's the strategy for having such a big increase?
You see a couple of our EVs, right? The red one being the SU7, and then the yellow one, which is something that we just launched, is our SU7 Ultra, which we are selling at a starting price of over 500,000 RMB. Right? As I mentioned that, last year, we've been ramping up our production. Obviously, the SU7 was a huge success in the market. I think a lot of investors, a lot of customers like it. We have a huge backlog. If you look on the app this morning, I think the average waiting time for SU7 right now is at least 30 weeks. Right? So that's a huge backlog for us that we need to deliver. In terms of how we are going to do it this year, obviously, you've seen us yesterday raising our target from 300,000 for this year to 350,000 for this year. We need to work very hard to improve our production. Right? So we are happy. We are rapidly expanding our production capacity, and also ramping up our delivering capability as well, which we are very confident that we can achieve that 350,000 target for this year.
How do you go about doing it, though? I mean, do you have plans, for instance, to add on an extra factory? What's sort of the spending or the thinking in that area? We are running one factory right now in Beijing, which is fully ramped up. We are working very hard to squeeze the extra production volume out of that factory. But at the same time, obviously, we need to continue to expand our production capabilities by adding new production sites, which we're working on very hard right now.
And that was Xiaomi Vice President and CFO Alain speaking to Bloomberg's Annabelle Drewlers. Now, Tencent is the next focus for China tech bulls as it grabs investor attention over the country's great leap forward in artificial intelligence. Its earnings released later Wednesday is expected to provide important clues on its potential to catch up with rivals such as Alibaba, including how much it intends to spend to grow its AI business. Beijing's latest promise to boost consumption has added further momentum to the tech-led rally in Chinese equities. It's also turning attention to how the internet firm, co-founded by billionaire Pony Ma, plans to commercialize AI to complement its chat app, game, and internet advertising businesses. Plenty more ahead. Well, Indonesia's stock market is stabilizing today after yesterday's rout that at one point saw the biggest losses since 2011. The wild moves have sparked fresh concern about investability. Meanwhile, the rupiah continues its slide ahead of a central bank decision in a few hours. Avril Hong has been tracking developments for us. Still, back in the news, back in the headlines.
Absolutely. I think it really caught the attention globally just how bad the selling was in Indonesian stocks. And it was actually the biggest decline, as you say, since 2011 to the lowest level since 2021. And while losses were eventually paired, you do get the sense that some of the damage, the concerns about how investable the Indonesian stock market is, that concern continues to weigh. And of course, traders didn't quite flag one single catalyst. They said it was a combination of factors, growth, fiscal discipline concerns, along with these rumors swirling about the possible resignation of the finance minister, which of course were later dispelled. Now, the point being made here, when you look at the Jakarta Composite, the declines yesterday brought it even deeper into a bear market, but also the volatility spiking to the highest level since the pandemic. So keep that in mind as we see the rebound even in Indonesia's stock benchmarks. Flip the board and take a look at the rupiah, because it wasn't just the rout that we saw in the stock market as the Indonesian currency slides continues ahead of BI decision making. We have the consensus certainly for no change, as it might be too soon after the surprise January cut. And you have the currency risks as well that could weigh on the rupiah. Think about how the narrowing gap with the US is a drag, a gap that is too small to protect the declines on the Indonesian rupiah. Keep in mind as well that we have a handful of economists that think that it's still too close to call because BI could actually prioritize growth. Flip the board. I just wanted to quickly show you as well where we stand in terms of the performance across the region in Asia FX. Don't forget, there's also caution ahead of the Fed. There's a tariff deadline. We're ticking closer to April 2nd. Indonesian rupiah, the worst performer today. The Philippine peso, among the best performers, with this expectation of still solid growth in the country, Has.
That's right, and we heard about that potential in growth. Philippine Finance Secretary Recto says the nation's economy could grow by up to 7% this year. Earlier today, he also told us that inflation is under control and he sees room for a rate cut.
The headwinds are global growth may slow down, but like I said, 72% of our economy is domestic, it's consumption driven. So far, our BPO industry is growing. That's our service exports. Our OFW remittances continues to grow. We hope that's not affected by these headwinds as well. Tourism is improving. We had more than $10 billion last year. And there seems to be interest in investing in the Philippines. Samsung is talking to us for a possible investment of more than 50 billion pesos. They're applying under the incentives for CREATE and many more.
There are murmurings on the ground on the back of the arrest of former President Duterte. Might that affect the prospects for the country? Might that impact investor sentiment?
I don't think so, because that's nothing to do with their macroeconomic fundamentals to begin with. There was a slight reduction in the stock exchange, but very subdued. But the peso appreciated on the day that he was arrested. So it could also mean that the international community is looking at how important the rule of law to us is concerned, and that's a part of governance as well. With regard to our position on a rule-based order, international rule-based order.
How would you rate the chances of the political situation unraveling and prompting political instability in the government and in the country?
I don't see that happening.
Zero.
Yeah. But we have elections, as I mentioned earlier. We have a midterm election this year. It would appear to me, coming from Congress before, coming from the House, the Senate, I've had many elections in the past, prior to me being here the Secretary of Finance. And I could see that the administration will win a majority of the local government positions, 80%, I suppose. I think Congress, 80% will be also won by the administration. Same thing with the Senate, 8-4, 9-3. The survey shows that majority of the candidates of the administration are leading in the polls.
And that was my conversation earlier with the Philippine Finance Secretary, Recto. And joining us live and exclusively now is the President and CEO of the Philippine Stock Exchange, Ramon Monzon. Thank you so much for joining us.
Thank you for having me.
We had from Secretary Recto saying that he is optimistic of at least 6% growth that could go as high as 7%. Do you share that optimism?
Well, in fact, I know even ADB has forecast a 6.2% GDP growth for the Philippines. But
that's a ways off from 7%.
Well, you know, we have a long ways to go. We have 1 year to go. We have the elections coming. You know, the elections usually spur economic activity in terms of consumption. So I see no reason why we can't hit that 7%.
And of course, I asked him as well about the political situation, whether or not that might impact investor sentiment. He says no, not a chance, and not a chance that it would affect the upcoming election and how the government performs. Do you share that view? What are you seeing in terms of investor sentiment in the country?
Okay, well, actually, when that incident with the former president happened, a lot of the press people called me to ask me, what do you think will the impact of that be on the market? And I said, nothing. I don't think it's going to impact the market. And in fact, from the time that incident happened, which was Monday, I think, last week, the market has gone up. So I think it's just political noise, a lot of fake news on social media. But I think the business community is just moving on. You know.
So there's a lot of confidence in the market performance. How do you think it'll do for the rest of the year? There's been so much volatility globally in markets.
Well, so far we're maintaining a reasonable amount of liquidity. It has not deterred two big IPOs that we've been expecting, and I guess it's all out in the news. We have the Maynilad IPO. I've been talking to GCash about their IPO. It's something they're planning for the later part of the year.
Third quarter, fourth quarter?
Third or fourth quarter.
Third or fourth quarter? That's a question.
Well, I probably think it will be in the fourth quarter. Third quarter, I know Maynilad is going to be listing. There is the re-IPO of the SP Energy Company of Metro Pacific, which they will rename to Meralco or Meralco Green, M Green. So that's going to do a big re-IPO, I think. And so I think we're very confident in the market. I mean,
you mentioned only two possible IPOs. What is the pipeline looking like? Because we know you're trying to grow the IPO market,
yes,
but you have a lot of competition from the region, especially the likes of Malaysia and Thailand as well.
Well, competition is really not competition because there are no companies that are really, let's say, choosing between do I list in Malaysia or in Singapore versus the Philippines. So in that sense, we don't really compete. Okay, I know for a while GCash was entertaining listing in the U.S. Okay, we've had conversations with them, and we tell them, you do that after you list, you're going to be an orphan. You know, so I think that changed their mind, and they're going to be doing their listing here. The challenge really is to get more companies to list. Okay, and you know, I think the banks are so liquid. They have so much funds to lend. So a lot of companies don't see the need to raise capital in the market. So especially, well, when the rates go down, we'll see, what will happen. But that's a problem I think we have right now.
You talk about banks being liquid, but when it comes to liquidity in the stock exchange in the Philippine market here, it is one of the least liquid markets, and
Correct.
that is something you're trying to address.
Right.
Realistically, what measures will help?
Okay. Well, for example, we'll make sure that we enable more retail investors to trade in the market, seamlessly. So we've enabled the GCash wallet holders to invest directly in stocks. We provide the GCash with a platform for that. We're studying, do we need to have a market maker system, so I'm having my team benchmark the other markets, those that have market makers. Will that work in the Philippines? We're thinking of, changing the way we compute the index, because our index is really float-based, public float-based and market cap-based. But there are so many companies that have high public floats. Well, the PSE is one of them. Our public float is 48%. But it's so hard to buy stocks because the institutional holders just hold on to them. They don't trade. So these are the things we're studying. How do we, unleash the liquidity of those stocks?
Is it also about changing the psyche of the retail investors? Because right now, when it comes to the stock exchange, I think about 80% still institutional investors.
Right.
And realistically as well, how much are you targeting within a period of perhaps 2 to 5 years? What could be the percentage of your retail investors?
This might be hard to believe, Haslinda, but at the peak of the pandemic in January 2021, when our market was experiencing high volumes, okay, we were averaging 11, 12 billion pesos of trades a day versus about 6 today. In January of 2021, the retail participation markets was 51% of the market, okay? But of course, when the economy opened up and the people had could go out again, dropped to 35 to 28. We're now at 19. So again, that has to be addressed. That for me is a more systemic issue. We're talking to the Department of Education, getting people educated on the value of saving, not spending. You don't buy the new iPhone when it comes out that you save.
Is there something you can learn from a market like India, where the retail investors have been propping up, the rally that we've seen so far?
Okay, so obviously, you need to have more products. And one of the things we're looking at is really introducing more ETFs. We've been working closely with, I'm not ashamed to say, we try to learn from other stock exchanges. We're working with
Such as?
Taiwan Stock Exchange. In fact, I'm going there next week because we're engaging them to teach us on how to launch the derivative products here. They have 100 ETFs. Before Thailand was my model because Thailand's about 40-45% retail investor participation. Taiwan has 65%. So these are the things we are studying, and we want to be able to. We're addressing those issues.
Well, what's the target right now? Are you looking at 40% of retail investors?
Not right away. We're now at about 19-20. I think if we can get this up to 25 to 30 in the next year or two, that should be pretty good.
What is the biggest challenge in trying to grow your market? Is it the products that you're looking at right now?
Products, and like I said, we're a consumption economy. As Secretary Recto said, 72% of our GDP is consumption driven. So if people are spending, that means they're not saving. And if there are no savings, there's no funds for investment. So that's what we really have to address.
And in terms of the challenges for the Philippine economy, how do you see that being impacted, for instance, by Trump's tariffs?
Okay.
And the coming of...
Our market went up to about 7.5, 7.6 in October until the victory of Trump became imminent, and we dropped to as low as 5.9 sometime in January. We're now at 6.3. So it seems, the investors here have learned to take these tariff issues, more, I guess, rationally. I mean, because really, I think we only comprise 1% of the, imports to the U.S. So we should not be affected by the tariffs.
President Monzon, there are plans to introduce peso-denominated global depository receipts here. Can you shed some light on where we are with that?
Okay, we have just submitted our rules to the SEC because that's the way our rulemaking goes. We come up with the rules, we craft the rules, give it to the public for public comments, and then adopt some of the public comments if they're relevant, and then we give it to the SEC for the rules. So we're waiting for the rule approval, and we should be talking to the other exchanges on getting this done.
Right.
What our target is to get this done by this year.
By this year?
Yes, the depository receipts.
And you're confident it can be done by this year?
It can be done, I'm sure.
Thank you so much for your time today.
Okay,
good to be
thank
here.
you for having me.
Ramon Monzon, President and CEO of the Philippine Stock Exchange. Well, before we go, over in China, we continue to watch tech stocks including Xiaomi, whose earnings beat expectation on the back of EV plans. Tencent, of course, is set to release earnings later that will give investors more direction on the sector, especially when it comes to AI. Taking a look where we are in terms of the performance right now, it is a mixed picture. Of course, China tech have been front and center. We've seen a massive rally, some in excess of 50%, the likes of Alibaba. There is a sense that we're seeing a change in sentiment. Taking a look at how we are looking in terms of the broader market, we're seeing continued rally when it comes to Asian stocks breaking away from the declines we have been seeing in terms of U.S. stocks. Of course, the focus today will be on the Fed. It is expected to stand pat, but what will happen to the dots? Will we see a change in the trajectory of the Fed rate cuts? That is it for Insight. We're live from Manila, of course. Horizons Middle East and Africa is next. Do keep it here with us. This is Bloomberg.